Welcome to another episode of the Commonwealth Homeownership Real Estate Investing Podcast. I'm Phil Wong. Joining me as always is Brad Price, and coming back is Kim Nguyen. Welcome back, Kim. How are you feeling?
Thank you. Feeling good. So, in case anyone was wondering on the podcast, I actually did get tested positive for COVID. So, I was actually out for a month. I tested positive for COVID for a month. Okay. So, feeling alive to take the least. So, happy to be back. That's for sure.
Yeah, you had it pretty bad, right? It sounded like,
I did. Like it was just, it's one of those things. It's Russian roulette. Like even my doctor said it too. It really is Russian roulette. You never know what you're going to get. You could be the most healthiest person and it could just hit you like crazy, or you could be the most unhealthiest person and get mild symptoms. It's just such an unknown thing.
oh man. Well, I'm glad you're feeling better. I'm glad you didn't, things didn't. Yeah, I'm just glad you're feeling better.
Yeah.
So, welcome back.
Thank you guys. Happy to be back.
Well, it definitely hasn't been any less hectic here since you've been off, Kim. What is the latest and greatest in the mortgage world? Let's dive right into it.
So I think like the biggest news that comes through and is effective as of June 1st is, in case you guys were aware or wasn't aware of it, OSFI is actually changing the qualifying rules. So that's been a big shaker in my industry. There's a lot of people scrambling because as of June 1st, it's going to get a little bit harder to qualify for a mortgage. Again, this is only applicable if you are buying a home with 20% or more down payment. So we call it a conventional mortgage. So a mortgage that does not require the insurer, backing us up. That's who's going to be affected.
So, high ratios, are they still qualifying? Do they have a qualifying rate, high ratio
They
mortgages?
do, yeah. So right now, so in Canada here, if you're buying a high ratio, if you're getting a high ratio mortgage, the qualifying rule is you need to have enough income to qualify for a mortgage at an interest rate of 4.79, which is
Okay.
Canada's benchmark,
Okay.
or 2% plus your actual interest rate, whichever is greater. That's what you guys would qualify for. But with this new rule, though, those who are looking to buy a home with 20% down payment or more will need to either qualify at a rate of 5.25% or your actual interest rate plus 2%, whichever is higher. So in today's rate economy, it would be 5.25%.
Okay.
And what's the reason, Kim? Like, why is this coming into effect?
It's such you know what? The big news is that a lot of the banks actually rallied and asked for a change. There's a lot of people that went to the government and said, because the markets are so hot right now, we need to do something to cool down the markets. And I think it's just, again, sheer volume, right? Sheer volume for the lenders, and also, government of Canada is also afraid of affordability, right? That's another key aspect too, because as the house prices keep creeping up and up, like what will happen if rates do rise, right? Will people have to foreclose now? That's kind of what they're concerned about. They just don't want another housing crisis to happen, and they don't want us to be in a bubble, right? That they just want to break it. They want to do something, anything to cool down the market. And I have a feeling that this is step one, and there may be more steps. If this doesn't help to cool the market, they will implement other things quick as well.
Is
In
this
that case, sorry, but
go ahead?
in that case, do you see interest rates going up as a secondary measure as well?
No, I actually don't. I think
Okay.
interest rates are actually going to stay the same. I don't see it going up because I feel like with the way that the market is acting right now, once rule changes, it will affect some people, not all, and that will cut off a few clients, right?
Mhm.
But again, it's not enough to actually like increase rates and make it, like I said, less appealing for clients to jump into the market. I think rates will actually stay the same.
What about the federal government printing money? What's happening with bond yields at the moment? Are we on an even keel? Is that why you're quietly confident that rates are going
Yeah,
to stay where they are for the
actually
time being?
stable, guys. It's really been stable. It hasn't really moved much. It's still sitting at around, today I checked, 0.96, give or take. So really what that in essence means is that the current rates that we see right now, the ranges for fixed rates anyways go anywhere as low as 1.54 to about 1.94, give or take, right? And with the bond yields, it's being the same as how it's been for the past week or so. I don't really see any major changes, but we'll see after June 1st. But I have a feeling that just naturally, because we're in a busier spring market, busier summer market that's coming, these are the hottest times for real estate. And again, if lenders are smart, this is a time that they want to introduce these promos, introduce these really competitive interest rates so that way, like I said, they're getting more clients, right? Clients are buying, go to them. They got to stay competitive. This is the time to make money for them.
Yeah, makes sense.
I'm guessing the market's probably, from your perspective, still hotter than ever with these new rates coming in and people scrambling to buy before they have to qualify at a higher rate.
100%. And then when you really break down the math, it's actually just about a 4% reduction in how much you actually qualify for. So it's not too much of a difference, but again, it could really be make or break, especially if you're in the more expensive markets like in Toronto and Vancouver. It would really affect you there. But here in Alberta, like a 4% reduction in your mortgage amount isn't that much, right? It's still something that's doable. Yeah, you can still find something that's kind of quite comparable. So it's not too bad here in the prairies, but in the other ends, it's more challenging.
Yeah, I think
So, okay, sorry, your
no,
turn.
for sure. I think that's a really good way to look at it. So for folks listening, yeah, like you read a headline and it can play a bit of a, have a psychological effect. But when you actually break it down, if you look at it from a 4% perspective, that's only on a $400,000 house, it's only $16,000. So really, when you're out there looking for properties and you're taking that into consideration, it's not really a game changer. Whereas when you're in like another city, say Vancouver, Toronto, like you're talking in the tens of thousands of dollars, right? You're like your $1 million average house price. You're $40,000 straight off the bat.
Mm-hmm. And that could be, that's a lot of cuts, right? Maybe that's, now you're trimming down the square footage, or maybe now you're going to another neighborhood that isn't as nice. So that's why it's really going to impact the bigger markets. But in Alberta, I really don't see that slowing us down. Like, we're hotter than ever here. It's crazy out there in the market.
And frankly, if you need that 4% to qualify for a mortgage, you probably are qualifying for too much anyway. You probably don't want to push your upper limit when you're buying a house.
Yeah, another thing to consider.
Do you find with not only house prices and all that being hot, but materials costs, lumber prices have been skyrocketing like crazy. How will that? Because, for example, I've done a couple new builds recently, or purchased a couple new builds recently, but anyone purchasing a new build over the last couple months probably would have seen the builders jack up prices on a monthly basis by thousands of dollars, tens of thousands of dollars. The banks appraise it for a certain value, but because the builders are jacking up prices so quickly, do you see that? Have you seen that being an issue with the lumber prices going up?
Definitely, 150%. So it is a common problem that we're seeing these days, because usually when you go into a bank and let's say you're buying a new build, right?
Mm-hmm.
Most lenders, a majority of them, will require an appraisal. And within an appraisal, the main things that they're looking for is that you're buying the home for what it's actually worth. And within the appraisal report, what they're looking at is recent sales in the area. Okay, so they're
Mm-hmm.
comparing it to resale homes on the market. That's how they come up with the appraised value. But the issue that we're running into is because of the huge increase in the homes, especially for new builds, there's no comparables out there to match it. There's just nothing that is of a comparable. So in essence, we're seeing appraisal values come back lower. And the detrimental thing to that is if your appraised value comes in lower, you have to come up with that difference, right? If your appraisal comes in 10K lower, well, that 10K has to come from you in addition to your existing down payment if you want to proceed with the home. So it is a common problem that we're seeing right now, just because, there's one builder in particular where I know that they've increased their price by 25,000 already within 1 month. Same lot and everything, 25 grand. Like, that's crazy.
Yeah, I mean, the places I signed for when I got under contract. A month later, they jacked up the price $16,000, and that was between February and March. So I can't imagine what prices are looking like right now. Feel like everything just prices just going up and up.
Yeah, no, and we just don't know like if it's going to go down anytime soon. I would hope so. Like I'd hope, the supplies come back, but it's really hard to say right now. Buying a new build, like my advice for clients going down that route is just be mindful that again, like if an appraisal is required, something to be mindful, right? It could be very difficult to get an appraisal.
Hmm.
Yeah, just on the supply chain, I don't think you'll see the prices dropping immediately or anytime soon because a lot of that material is pre-purchased in bulk by a lot of those big companies. Um, so, what we're purchasing today at a store level, it has been pre-purchased 6, 9, 12 months ago. So when they're purchasing now, I mean that's just going to carry on until 12 months, 18 months down the road. So there's going to be no real. It might plateau a little bit because it'll maybe slow down, but it has to catch up again. So those price increases are going to carry on for some time. But just on the like the appraisal side of things, are all of the banks, are all lenders across the board in this day and age looking for appraisals even on new build properties?
It is a more common thing that we're seeing now. So usually what happens is when we submit a deal with most lenders, they have like an automated valuation model. So that means that, you enter in the property details and it runs through their backend system to see if this value is good, right? They go through their database to see, okay, yeah, this value is good. But what we're seeing now is because the prices have gone up so high, it's not passing that automated system. And instead it's triggering an actual full appraisal. And that's where we get in trouble, right? If it passes the automated system, perfect, we're golden. But right now, because of the crazy increases, I'm finding it's more and more common to see an actual appraisal being triggered, unfortunately.
Hmm. So is there situations where existing properties are actually easier to work with than new builds because the historical data is trending in the right direction locally?
Yep, for sure. If you're buying a resale home, there's going to be more comparables, again, like compared to builder deals. Because the one thing that you have to keep in mind is if you're working with like a large volume builder, sure, they may have sold the exact same home on a different lot with the same price, right? That could be considered comparable. But if it wasn't listed on MLS, the appraiser cannot use it. So that's where we get in trouble because while your builder could come back and be like, well, you know what, this is the price of the home, your next door neighbor is the exact same layout, just a different lot and stuff. And that's what we sold it for. Because the sale didn't happen on MLS and we can't use that as a comparable when doing the appraisal report, that's where it gets tricky. That's why when you're buying a resale home, when realtors list a home, that's what they're doing. They're doing market research on things that have sold on MLS, right? There's no off market listings, nothing like that. Everything is purely MLS listed.
Okay. I mean, every time I purchase a home, I've always had an appraisal done. So, what circumstance would a bank not ask for one?
Usually primary residence. So when you're buying a rental property, it's mandatory you need an appraisal. So it's very rare that a lender would let it pass without an appraisal. But the main thing is if you're buying a rental, appraisal is required, hands down, all the time. There's no exception to that. But when you're buying a primary residence, that's where it can go through the automated system. But again, like I said, it has to filter through that, and if it doesn't pass, then for sure we need an appraisal.
So we talked a little bit about if the appraisal is completed, but the value's not there on the appraisal because maybe there's not enough comps. What about situations where the appraisal comes back at more than what you're purchasing the property for? Does that affect the amount the bank will lend you or set you up with, or they just give you the mortgage that you've asked for?
Yeah, they usually just, if it's a purchase, then they just give you the mortgage that you've asked for. But if you're doing a refinance, that's when we can go back and then push it up to the 80% loan to value of the actual appraised amount.
And how about pre-approvals? When like in this crazy day and age that we're in this wild market that we've been seeing this last little while, like typically maybe walk us through a standard pre-approval, a timeline, how long that would normally last, and how has it changed or what's been happening in that side of things?
Yeah, for sure. So The one thing with this crazy market, a lot of clients are doing pre-approvals, of course, by their advice from their realtor, just simply because in a hot market like this, you cannot write an offer unless you're actually prepared. Because right now, if you're asking for such long, like condition of financing date or something, you'll lose the deal because the market is so hot. We're also seeing this trend here where a lot of clients are doing pre-approvals because they're under the assumption that if they do a pre-approval before June 1st, they will be grandfathered the regular rules. So to set the facts straight, many banks have actually come out and said, no, that is not the case. So even if you have a pre-approval in place and, we ran the numbers qualifying you on, the 4.79% interest rate, if you find a home and you have an actual offer to purchase that's dated after June 1st, you're going to be requalified at the new rules. So it's something that, most consumers should be well aware of. And this is also for those investors out there as well too, right? It works the exact same way. Like when you're stress testing your portfolios, you're probably using the 4.79 now, but again, if you're buying after June 1st, you need to use 5.25%.
How about the turnaround times here? So we talk a little bit about the if you going in unprepared and you're getting to that end of that period where you need to waive conditions for financing and go for an extension. And this is something that I've run into in the last week or so here. But I mean, you can lose a deal if you have to ask for an extension. So what are the typical turnaround times at the moment that you've been seeing?
It's crazy. So again, every lender is a little different, but the general consensus that we're seeing is pretty much almost like 3 to 5 business days. We even have a local credit union that we're working with that just sent an announcement saying they're 8 business days for review right now. And on top of that, there's some lenders that have even mentioned that if we have an offer to purchase, and let's say, it is May 25th or something like that, if we see the closing date is not 30 days past that date, so June 25th, we will not review it. We won't make it in time because again, it goes through this whole cycle, right? You got to do the underwriting for the few days. And then behind the scenes, you got to remember the lender's prepping the paperwork to send to your lawyer for the final signing. But again, of course, lawyers are also busy as well too. So have been lenders that have been very vocal. They say, if your closing date is within 3 weeks, forget it. Don't send it to us. We're going to decline you. We won't give you any mortgages. Be mindful of that. And I've had even some cases, clients coming to me saying that they walked into their local branch, just saw like a financial advisor, and it took them 3 weeks to get an answer. They extended conditions 3 times. So it's one of those things, right? Luckily, again, too, on the broker side, like we actively know what the lender turnaround times are because they have to send us that update, right? They have a commitment to us. But if you're working at like a local branch or something like that, there's millions of underwriters that work in wherever, and they're not obligated to give you turnaround time. But 3 weeks though, and that was from one of the major banks. 3 weeks.
So bottom line is, do not try for a quick close in this environment.
No, not like I don't recommend it because then you got to remember you're shrinking your lender pool, right? There are still lenders that will service that. They'll be like, yeah, give it to me, no problem. But I know that I'm the only lender that will do this. So my rates aren't going to be great. They're going to be terrible.
And speaking of lenders, I know last couple sessions we talked about how because of Alberta's economic environment, they're kind of limiting in terms of if you're buying investment properties, they're limiting the number of properties that you are allowed to have. Like I think some lenders are limiting those lowest 3 properties. Anything beyond that, they won't let you purchase more. Has that changed given that the housing market has improved significantly across the country?
It has. They're more open to those exceptions. It's still considered an exception, but at least the door is open now. Whereas before the door was completely closed and they said, nope, you're buying your 4th one, not doing it. We're not looking at it at all. But now again, the doors are open, and it also helps because lenders now, especially if like in Alberta, right, where we're at, we used to be looked at so poorly just because we weren't doing as well. Lenders were like, this is a high risk area, but now that we're seeing some stable growth, again, lenders are opening the doors up, they're allowing exceptions, but they're still on the side of, they're still kind of cautious just because, again, like it's not steady, right? It hasn't been that consistent yet. It's only been growing for the past 5 months or so. So I think like if this continues for the whole year, I think Alberta is going to be back into the lending game. Like more lenders are going to be more open towards Alberta.
Okay, awesome. It's funny because I was looking at stats of Alberta last year in 2020. Alberta actually had the highest population growth outside of the territories in Canada, right? Which is crazy considering like how lenders are viewing us, or we're like kind of like they're trying to avoid us like a plague, but no pun intended. Uh, but it's yeah. So I think yeah, it feels like there's a lot of potential in Alberta that a lot of people aren't really
Really.
recognizing.
And I think like the one thing that's really been helping too is I'm seeing a lot of clients actually move here, like more clients move here from the bigger urban cities because again, affordability is
Hmm.
one thing, and the whole work from home movement. They're like, well, now I really want a backyard, and I can't really have a backyard when I live in Toronto, and my budget isn't that high, right? To have a backyard in Toronto is a very expensive thing. And not many can afford that. It's expensive, right? You want a backyard, like your home's going to cost you upwards of 1 million, right? And usually, if your purchase price is at 1 million, you got to do 20% down. How do you afford that? That's a lot of money.
That's crazy. And here you got the mountains, right?
Kim, where are we with refinances, increasing lines of credits? What's the process right now? Because I know just with the increased value, a lot of people have been coming back to try and access some of that equity in their properties. And especially one thing I have noticed is, uh, you know, investors outside of Alberta, where appreciation gain has been massive over the last few years, accessing equity to then invest in Alberta. So
Mhm.
through that refinance process, obviously it's a good way to access some funds. But I mean, is that process changing? Are banks viewing it the same as they always did, or are appraisers being conservative, or are they, happy to appraise at what the market is dictating?
Yeah, so I think process for refinance is still the same, right? Like you still have to go through the whole application process, and there's always still going to be an appraisal that is involved in that situation. But again, because of the increased movement, like more sales in the market, your appraised value is a little bit more favorable. And again, like I find that appraisers aren't being so conservative with that because they see how hot the market is. So I'm finding that appraised value is coming in at what we're seeing, or if not higher. But the only thing that is scary though is, clients that are looking to do some type of refinance plus improvements. So I've got a lot of clients who are like, you know what, market's picking up. Why don't I take out some equity and, develop my basement, build a home gym, or do whatever the case is. If you're looking for some type of improvement product with a mortgage, with a refinance, just be careful because what we're seeing is, again, going back to the whole builder talk, the cost of lumber is going up. So cost of supplies and materials going up, cost of labor is going up. What we're seeing is that clients who want to, use the develop a basement as an example, clients who want to develop a basement, they're providing the quote to the lender saying, here's my quote. I want to develop my basement. Can you please fund this? Can I, get this portion mortgage? And what we're finding is when we're doing the appraisal to ensure that that value is there, if we do this basement development, are we going to add value to your home? We're finding that the two numbers are different, right? The cost of doing all the renovations is much higher than the actual value that it's actually going to build on your home. And when that happens, the lenders either won't proceed with it, or you have to reduce how much you can get in terms of improvement funds.
And are there specific items in a property that you should look at, either renovating or not renovating as part of the purchase plus improvements
Totally, yeah.
option?
So I find like the most bang for your buck, kitchens, 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 kitchens. I don't know what it is, but I find that that adds a lot of value to a home. Kitchens, some bathroom upgrades, or just like simple things like replacing carpet to hardwood floor, right? That's been a big one. But the ones that you have to be really careful of is basement developments, while they are really, really good. But if you're doing something like a home gym, could be really, it's questionable, right? It's a little questionable because again, you're not adding like any rooms or anything. It's a gym, right? If it's going to be an open space as a gym, there's not much value to it. Another thing too, now that we're coming into the nicer weather months, landscaping, be careful with that because I had a client here looking to add artificial turf, fake grass. That stuff is expensive, you guys, but did you know it doesn't really add that much value to your home, whether you have fake grass or real grass? It really doesn't. The return is actually, it's not that high. And if you have that in your quote, again, the lenders won't lend dollar for dollar for that, right? It's just not, the improvement amount isn't there.
What's your opinion on A, legal basement suites, and B, garages?
That one there, legal basement suites, perfect example. That definitely increases the value. But the thing that you have to be careful of is the cost of labor and material now, right? Because before it was reasonable, pricing wasn't crazy, but now I feel like it's like the whole builder thing now because everything's expensive. Supplies are expensive and labor. That top up on the lumber and also the top up on the labor because everyone, everyone's busy now. If you find like a good tradesperson, they're going to charge you an arm and leg because they know you can't find anyone else. That small cost alone could cost you the whole improvement quote, right? It could cost you the whole appraisal because it's too high of a jump. Like we're seeing that side like really, really spike up.
Okay.
Trades are just milking it. They're making good money.
In terms of, how about garages in terms of improving the value of your property?
Garage is still good. So garage is still a very, very good improvement.
Okay. Anything else that you can kind of think of off the top of your head that our listeners might be interested in knowing more about? Or...
If you are in the market, just be patient, right? Just know that lenders, they are so slow and behind right now because of the sheer volume. And you got to remember that many lenders, they work Canada wide, right? So it's not like they're only underwriting deals in Alberta, like they're doing it everywhere. And usually the hub is in Toronto, so they take care of all of Canada there. Just know that if you are in the market, just expect that it is going to take longer for you to hear back from your lender. It will, naturally it will, just because of the volume. But another thing too is you can't jump the gun and move into your home as soon as you want. Like usually it has to be after 1 month, right? Because again, there's so many steps involved. But I think that trend is actually going to continue for all of summer, to be honest with you. Even with the new rule changes, I don't think it's really going to slow much down, especially in Alberta. Because again, when breaking down the math, it doesn't make that much of a difference. Again, if we're looking in the average price range of 400,000, right? That's kind of the average house right now. It's not going to make or break the deal too much, and I don't think it'll slow down the market because the demand is really strong right now.
Okay. All right. Well, I mean, that's a great episode, Kim. Thank you. I mean, from what I've gathered so far, make sure you allow enough time for your closing to make sure the lenders get back to you and you don't have to extend. B, don't panic with the upcoming qualifying rate increase. It's a 4% drop in your purchase power, but hopefully you shouldn't need to depend on that 4% anyway. And C, be more mindful of your upcoming renovations. Because lumber prices are probably not going to be dropping for a little while.
We're going to hope that it drops sooner rather than later.
I mean, it has to. I mean, right now, was it $13, $14 for a 2x4 when same time last year it was like less than $4?
Yeah, it's crazy.
It's crazy. It's like a 400% increase in price. Like it's unsustainable, really. I mean, I know a lot of people already kind of putting a lot of projects on hold just because they, it doesn't make sense to purchase wood at that price.
Yeah, totally.
So, I mean, I think now the lumber mills are kind of slowly, picking back up and churning out their product. Hopefully it catches up sooner than later, but I guess only time will find out. You know what? I'm excited to find out what happens next month after the qualifying rates change. I'm curious about whether or not the market actually slows down a little bit. Well, thank you, Kim.
Thanks,
and
guys. Yeah.
And thanks for listening, everyone. Stay safe out there.